Hello and welcome everyone to the Gold and Silver Club end of week commodities review for the 10th of April 2015, presented by myself, Phil Carr. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an overview of the commodities markets. We'll look at the top trades of the week. We'll also cover live market commentary and, of course, technical analysis. So first of all, just before we look at the top trades and we start going through the commodity markets, let me introduce you to the Gold and Silver Club. So the Gold and Silver Club is an international commodities trading, research and advisory group specializing in the precious metals, energies and agricultural markets. We're recognized as a leading go-to authority on the commodity markets and as internationally respected commodity experts. The group's analysis and opinions on the commodity markets are routinely sought by major financial television channels and publications, which includes Bloomberg, Reuters, CNN, Global Banking and Finance Review, and the Wall Street Journal, just to name a few. And the Gold and Silver Club has advised and taught technical analysis, fundamental research, and portfolio management to more than 50,000 private and institutional clients worldwide. So for further information on the Gold and Silver Club and our expertise, please feel free to visit our website at www.thegoldandsilverclub.com. Okay, good. So we'll just take a look at the gold price right now. We're currently trading at $1,202 per ounce. So we'll look at the technicals very shortly. Some of the top trades of the week. It's been another lucrative week following on from the Easter break. So we'll just take a look here. So first of all, we had a lovely sell short opportunity this week on soybeans. The profit on that 300-point return for a risk of 130 points as we've continued to break down with the overall primary trend there. Gold also gave us a nice sell short earlier on this week as it broke down after it spiked from the Monday open, sold off, and it's just continued to follow through, giving us 180-point return. And natural gas also finally broke down just yesterday. It's been a nice sell short over the last couple of days. Looks like there's more downside on that as well. The risk on the trade was 60 points for a 125-point return. Okay, so those are some of the top trades that we've had over this week. We'll move over and have a look at the technicals now. So the first market I'll just show you at the moment is going to be the US dollar index. So the US dollar index, we finally got a resolution of a pennant that we've had here, which has been developing over the course of this week. So you can see here where we finally had a breakout in the last couple of days. It's been quite a solid move to the upside. The non-farm payrolls last week, we saw a sell-off. We came all the way back to the lower end of a trend channel. This was the huge sell-off that we got on the FOMC announcement. Okay, so that was going back. We were looking at the Wednesday, the 18th of March was the FOMC announcement where we got a 500-point sell-off in the US dollar. However, that was very quickly supported, 250-point retraced, consolidated, retested the lower end of that trend line on non-farm payroll, got supported, and we've had a good breakout. And that the reason we're looking at that is because obviously we're trading gold and silver and the other metals priced in US dollars, so we'll see an inverse correlation. So what we've seen with that breakout is there has been a nice sell-off on silver over the last week. You can see we've got a major trend channel on silver going back to July and August last year where we had the highs put in, the recent highs, swing highs, and you can see here where this trend channel has found resistance again. We opened on Monday because the commodities were closed last Friday due to Good Friday. So the market spiked on the open, but they came up to the upper end of this trend channel, produced a rejection candle, and you can see here where they've followed through. Ultimately, we're starting to break down on here, getting a bit of a boost to the upside today, but there's quite a lot of overhead resistance around these current levels. So if we just get a continuation as we go into next week, we could start to see silver break down here. I mean, typically in terms of seasonality, we would expect the metals to be a bit weak over April. So we may get a continuation here. So silver is looking good for potentially more downside. Bit of a retracement today, but we can't continue to sell off consistently like this. It will need to retrace in order to get lower. So that is quite all right for it to retrace at the moment. And then we're looking for further downside as we come into next week. Similar situation really on gold at the moment. Gold's been trying its best to get a breakout to the upside. We did get a breakout on the open on Monday after the markets were closed. The gold was closed on Friday for Good Friday again. We saw the US dollar sell off on Friday, so that caused gapping on the open on Sunday, but we formed a rejection candle, and you can see over the course of the week we've started to break down here. we have encountered a lot of resistance on gold. If you just go back to the previous resistance we had in February and March, you can see the 1223 zone is really providing a lot of strong resistance. A breakout from that zone would give us quite a high momentum trade. We're not near a breakout at the moment, but you can see we should get a powerful move. We'll get a lot of trades get triggered and stop losses hit if we can just get a break above the 1224, 1225 zone. So that will give us a nice momentum trade to the upside. We're developing a little bit of a trend channel here on gold. You can see that at the moment hasn't broken down as much as some of the other metals from the strength of the US dollar. So gold at the moment, we're still coming towards the lower end of the trend channel. I'd like to see whether we'll get supported or next week whether we break that. If we do break that trend channel, then we'll start getting more downside here. You can see we've got a swing low to take out, which is about 1177. If that gets taken out, then we are definitely going to get more downside here. We may even get a head and shoulders pattern. This would be the head, the left shoulder, possibly the right shoulder. Let me see if I can just draw that, how that would actually play out if that was to be the case. And then we may get more downside as we come into April and May here. So if that head and shoulders pattern was to play out, we would see another move potentially down to the 1178 zone. Support at that level, we would rally back up, but it would be a shallower rally, and then we would form another high around the 1200 zone. We would then come down, and then we would be looking to, this is how the head and shoulder pattern would form. Okay, and then we would have a key zone here, 1178, just to break down, and then we would likely to sell off significantly if we did get a breakdown in that way. So that's one way you want to have a look at gold at the moment. But for the time being, it's just about supporting those levels. But 1178 will be a key level here at the moment for gold. So we'll continue to monitor that as we go into next week. But you've got some key levels there to look out for. Okay, we'll just have a look at copper at the moment. Copper has been a real slow mover over the last week. We have had some rejection here just on the higher time frames where it started to break down. It's consolidating at the moment. If we can just take out the week's lows here, this is where we'll start to build up more downside. So you can see we've got about a week's worth of consolidation. The price isn't really able to build up momentum. Every time it's producing a breakout to the upside, these are getting sold into. So you can see each breakout here is being sold into, which is creating a trend channel just on the daily. So we're likely to get potential for a breakdown as we go into next week now. If we continue to consolidate, I would just like to see, if we break out from this trend channel, the resistance channel, we may get a continuation pattern, bullish flag pattern. But otherwise, if we break down from this consolidation, we could get some nice downside as we go into next week. So we'll continue to monitor copper here, just moving sideways. But the longer it moves sideways, the bigger the move when it finally does break out of this consolidation. So copper for me, definitely one that you want to keep an eye on. Natural gas broke down very nicely on the storage inventories yesterday. On the much larger time frames, we've taken out some really key supports here. You can see where we're breaking down, and on the weekly as well, you can see where we're also we're starting to break down. So this is looking quite good for more downward pressure now. Natural gas, we had some rejection last week, rejection candles, which gave us an opportunity to get back in for a sell, and we've continued to sell off. Yesterday was quite a good sell off actually with the storage inventories. You'll see we moved about 120 to 130 points ultimately in the last 2 days. So potentially more downside expected here for natural gas as we go into next week. You could just add some trend channels onto that chart just to give you an idea of where the support and resistance zones they sit, where we may get more opportunity for a re-entry here at the moment. Just add that on. Okay, so essentially, if we start to follow this channel, we could really start to build up some momentum to the downside here. So natural gas, definitely one that you want to keep an eye on as we go into next week. Brent and WTI still really consolidating. They need to form a resolution. We've got a really nice pennant formation, which is formed on Brent. So we're just still chopping sideways here. Need to really take out the weekly highs and last week's highs here. You can see here where this pennant, we're just getting a tightening in price here. So the volatility is starting to reduce a little bit. We've got very clear support below, but also overhead resistance here for Brent crude oil as well. So we need a resolution. We need to see whether we are going to form a strong base here for oil and whether it can break out to the upside, or whether this will be the pennant will break down within the predominant primary trend, which is bearish at the moment. So we're definitely coming to an event area where I'm expecting a volatile move very soon, with oil. So we'll definitely be on the lookout for that. You'll remember the last pennant that we got, if we go back to the end of January, when we finally got a resolution, we were consolidating for about 2 weeks. You can see here, this was the pennant formation that we formed previously. And once we finally got a breakout, oil had a 20% move in 3 days. 20% was huge. So it was over 1,000-point rally over 3 days. So that's what we look out for here, potential for a really big breakout trade at the moment on oil. So you want to have that on your radar and don't miss it. So with WTI, just go out to the larger time frames, going back to 2003, you can see we've got a very firm potential. There's a bottom which is starting to develop here. It's still, the bulls and bears are fighting it out here. You can see on the larger time frames where we're just still consolidating. There needs to be a resolution of this soon. For the time being, you don't want to be chopped up in oil at the moment whilst it does consolidate, but you want to see if we are going to form a double low and a double base here, and whether we're going to start develop some momentum to the upside. If we just go and take it out into the daily here, we can just have a clearer look. A little bit of a similar situation. We've got rising support trend line. In fact, you can see where it's quite nice. You can see the channel which we're starting to develop here. So WTI is trying to build up a bit of a trend channel to the upside, but we could also just add some of this overhead resistance to the chart at the moment, which would just give us a pennant as well, where we're starting to just consolidate. So I would say ultimately it's looking better for WTI than Brent crude oil. It's still got some work to do to break above these much larger resistance zone. You can see where we've tested this resistance at 55, about 3 times over the last, since 2015 here, going back to January, February, and March. That's going to be a key zone. If we have a failed move above that, we're likely to break down again. But if we can get a breakout above that zone, that's going to be potentially give us some good breakout trades to the upside. So you definitely want to have WTI and Brent crude oil on your radars here for potential breakouts. Okay, so keep those on the lookout. We'll set alerts for those. So if we go over and have a look at the grains, soybeans at the moment had a nice breakdown over this week. You can see we're very close to closing below some of these previous swing lows on the chart. The major support zones forming a nice V-shaped reversal pattern here as well. I'll just zoom out a little bit so you can see that. So you can see where soybeans is breaking down. We've had some good sell shorts on this over the last week as soybeans has continued its momentum to the downside. Similar situation really on corn at the moment. Fairly strong correlation between the two grains. We've had some sell short opportunities on this throughout the last week. Although corn is tending to consolidate a little bit more here. It's just tending to move between support and resistance. You can see where it's just tending to ricochet. So giving opportunities to sell at resistance and buy at support on confirmation. Grains have given us some good opportunities. So overall, hope you enjoyed a good Easter. And following on from the Easter break, we've had some really good opportunities over the last week. It's been really quite lucrative. So I hope some of you benefited from some of the moves that we've had over this week. We're likely definitely to get some more good setups as we come into next week here as well. So on that note, I don't think there are any more technical questions just coming through at the moment. So what I'll do, I'll just talk you through our live trading room, which runs throughout the week. So you can find out more about that, how to join us on our live trading room, how to take the exact same trades that we're taking as well at the Gold and Silver Club. Very simply, the enrollment for our live online trading room, it's by application only. It's very simply just going to, I'll just post it in there so you've got the link easily available. It's just www.jointhegoldandsilverclub.com. Okay, just from there, you'll get a very simple form which just take you less than a minute to fill out to enroll in the live trading room and find out more about the Gold and Silver Club. Okay, so if you'd like to do that, look forward to hear from you. Otherwise, I wish you all good trading today. We should get a nice, interesting session this afternoon. Definitely keep an eye on the energies and the metals, and have a great weekend, guys. Okay, and thanks, of course, to Adinda and the team for putting on today's webinar. Okay, thanks, guys. Have a great weekend. Good trading. Take care. Bye-bye.